All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital coming at you guys live here a few minutes after 11 a.m. Central Standard Time here on, man, what is it? It's Friday, the 4th of August, 2023. How you guys doing? Blacktooth Grin, I see you there. He says, why are there 3 thumbs up for this? Yeah, why are there only 3 thumbs up for this? Come on, guys. Hit the hit the like button. Subscribe to the channel. Follow me anywhere else you see me. Leave comments. We're going to talk about the NFP today. Non-farm payrolls were released this morning. They were mixed. So we're going to talk about that and what that may mean. Again, as we continue to look at the overall picture of what the Fed's doing and what they're likely to do, we'll take a look. We'll take a look. I'll tell you what, we'll take a look here at like at the stock market, and we'll kind of see where it's at. I know we got a lot of people talking about big crash coming in. Same thing they've been saying for, a year plus. Could still happen, but let's kind of look at and see where we are, at least at the moment. Other than that, we've got a few stocks we're going to talk about. I've got Fibble that's going to be joining us. We have a little bit of a technical difficulty. Hopefully we'll be able to get that figured out. He's lagging pretty bad on his end, it looks like. So let me know if you guys, let me know if this is lagging right now or not. Because again, we want to make sure that it's we try to figure out what this issue was. That's why we're a little bit late starting here, trying to get figured out. What else? We're going to take a look at Bitcoin. Bitcoin's still ranging, guys. It's still going sideways, right? No lag there, Eric Quinn. Thank you so much. I appreciate it. Hey there, Frank. I see you there. Data as well. Good to see you guys checking in. Dan here. So we'll talk about Bitcoin. We'll talk about stock index. We'll talk about some. I got a few stocks I want to talk about. I've even got maybe 1 or 2 cryptos I want to talk about outside of Bitcoin, really, that I'm kind of looking at. A lot of cryptos look like, maybe they're kind of also look like maybe they're reaching the peak of the rally pretty soon, if not already there. We'll take a look at the dollar, of course, guys. Same old Friday. We're going to take a look at what's going on, get us a better idea of everything, maybe take a look at some precious metals. The idea here being to give you this overall understanding of the market, markets, the economy, what's going on, to get an understanding of what maybe we should be doing, right? But at the end of the day, guys, remember, the only thing that you control out there is how much you lose, right? You guys understand that, right? That is absolutely the only thing that you control out there. So what does that mean? That means as traders, risk management is absolutely the number one most important thing you're going to do day in and day out. You are not going to find your holy grail, your secret sauce, your special little winning thing, as far as a technique or a method or a theory of trading, okay? They're all dependent. All of their success is dependent on proper risk management. I've been doing this almost 30 years. I'm going to tell you what, I've seen probably just about every trading system there is out there. And every last one of them, you are not going to be successful if you don't have risk management down, proper risk management. Okay, guys? I know it's the stuff that we don't like to think about. It's the boring stuff we don't want to do. But it's the stuff that makes the difference. Okay? Hey there, Andrew. Good to see you. What do we have? We had NFP came out today, right? You'll have to excuse me, guys. Got a little something in my throat here, okay? Yes, and bacon. Data says proper risk management and bacon are the most important things in the universe. I would have to agree. I like some bacon. So anyway, we had NFP come out today, right? And so if you'll remember last month, we had, we came in short, right? It was like 209,000. It was they were expecting like 240,000, something like that. We came in at 209, right? So we came in short last month, soft. This month, we were expected to be 200,000 jobs. It was only 187. So again, soft again. Not only that, but last month's numbers were revised down to 185. So right now, it's still 2,000 jobs more than the revised number. But of course, next month's going to come up, and this month's number is likely going to be revised as well. So nonetheless, it's another month, another miss on jobs, and we've been having misses on a CPI and the PPE. So, I mean, what's the Fed left to do? Well, it's not exactly that easy, right? So when we look at that, not only do we have the jobs number that comes out today, right? But we also have the unemployment rate, okay? Now, the unemployment rate was 3.6% last month. It was it was expected to hold steady at 3.6% this month, which, by the way, guys, we've been really low like this for a while, right? It actually dropped to 3.5%. So the Fed looks like goes, okay, well, non-farm payrolls, we had less jobs created than expected, right? Almost, 8% less, right? But also unemployment dropped another, 0.1%. Okay. So let me see here. ML Basic says unemployed people in the U.S. for 15 to 26 weeks. That went up again in July. This only happens when the labor market is turning and becoming less tight. Was a warning shot in 2007, 08. Yeah, so something to look at. But right now, still we missed, right? If we look at that, a lot of times when you're seeing stuff like that, where the jobs are decreasing, but the unemployment's also decreasing, usually it's because people just not looking for jobs, right? So you have your participation rate going on there. And so, yeah, so this time, it was 60, the participation rate, which means people actually looking for jobs, right? People out there looking for jobs, 62.6% last month. It says it came at 62.6% this month, so about the same. But yeah, usually that's where you're getting that. When you're getting that jobs that are dropping off and you're getting unemployment dropping as well, usually, again, it signals that point at which people are just kind of pulling off a bit. As ML Basics is saying there, you get the less tightening in the labor market. But, this is what you should be expecting, right? I mean, again, we have been down here at this 3.5% level for, quite a while. And I've talked to you guys about it before, the fact that when historically, when we're down here around this 3.5% level, it usually marks a bottom and then, job unemployment goes up again, right? We've just stuck around here a bit longer than expected, even longer than I expected. Sure. But usually, again, once we're around this area, at some point, this is basically the bottomish area. And so we look for a time to come up, right? As far as the unemployment rate goes. And, that's, again, something that the Fed's looking at. What else is the Fed looking at? They're looking at your average hourly earnings year over year, right? So it was 4.4% last month. We were expecting 4.2% this month, but instead we came still at 4.4%. So again, your average hourly earnings year over year are up, right? 4.4%, which means what? It means you have more money to spend. And so that's why the Fed watches that. They're like, okay, yeah, but if you've got more money to spend, then you're going to spend it likely, is what the Fed thinks. So that kind of gives them that extra reasoning for, okay, well, we need to probably still, drop our, raise the, excuse me, I got the hiccups this morning, the interest rates. So it's a mixed bag this morning, right? The jobs created is down, it missed, it was soft, but average hourly earnings are greater than expected. And then year over year there, of course. And then, of course, your, what do you call it? Unemployment rate dropped. So the Fed's still going to be, bouncing around with this. But, again, we're going to watch now what happens later this month now, because we have the next Fed meeting in September, right? So we're going to have the CPI come out this month, which, again, guys, everybody talks about the CPI, but remember the Fed's preferred inflation gauge is the PPE. And that's because one of the big reasons is because it actually measures, whereas the CPI just says, okay, are people spending or not spending? PPE says, okay, are people switching from name brand to generic? Which, obviously, if you're switching from name brand to generic, the population in general, that kind of says, okay, well, they're feeling the pinch, right? And so that's one of the big reasons why the Fed is, prefers the PPE, because it doesn't just tell them, okay, are people spending, less overall, but are they switching from name brand to, generic? So Eric says still have a lot of time left, but a pause at the next Fed meeting is a huge favor right now. Yeah. Again, so we're going to look and see what happens here. Again, numbers came in, PPE came in, was really soft last month. It's a mixed bag right now for the NFP here. But again, if you see the PPE coming out at the end of this month again, lower, missing again, I think the Fed is hard pressed to keep raising rates. I think they might, hold steady one more time at least. And if you're doing that, I think, again, I've told you guys, I think maybe we might have one more quarter point rate hike by the end of the year, Q4 sometime. But that's not even I don't even have like a heavy, feeling that's what's going to happen. I'll give it the benefit of the doubt. Maybe we might get it, but man, oh man, the misses last month, if they continue into this month, which they have with the jobs right now, if they do with PPE, then the Fed really has little pushing on it to, little reason pushing on it to raise, to continue raising rates. So that's where we're kind of at, guys. Again, we come out here, we've got people who've been very bearish, through last year into this year, noticeable, expected. I mean, why? Because, we were down for a year, right? We went down for a year. So recency bias is a bitch, right? We all kind of stick there and go, man, at what point do you say, okay, well, maybe that bottom's in? And so we've had a rally. I mean, technically, per definition, we are in a bull market in Bitcoin, in stocks. This is generally accepted definition, right? That's a 20% rally of at least 2 months over the course of or after a prolonged decline, right? So a year is a prolonged decline. We are up over 20% on both of them. And it's been, well over 2 months, right? It's been since the end of last year. So, you can sit there and you can argue, oh, no, we're not a bull market because we're not an all-time high or some silliness like that. Or, oh, we're not in a bull market in the Bitcoin because we haven't had the halving yet. But, that's just emotional nonsense, guys, okay? If you want to trade, you want to make money, get out of the emotional stuff and get with the, okay, well, here's what we expect. If it does this, then it's generally believed to be a bull market. If it does this other thing, generally believed to be a bear market, right? Stop with the oh, it's a bear market bounce, 8 months later, over 100% rally, right? I mean, come on. After a year-long decline, it doesn't make a whole lot of sense. And some of you guys are listening right now, and I can hear you almost cursing me out and talking about how stupid I am, right? Can't be too stupid. Been doing this, for almost 3 decades, guys. You can't sit here and do it like that unless you figure something out, right? So, again, one of the biggest things that people have to do as far as, trading, especially if you're not consistently profitable, is that maybe you need to, tone down the arrogance, bring in some humility, be a little more humble, and listen to people that have been doing it for a long time. It doesn't mean we're always going to be right. There is no 100% guarantee in trading, guys, okay? So before we get in the charts here, I see Fiboswanny's joined us again. So I'll bring him up here in just a second. But I just need you guys to remember, at the end of the day, okay, if you're learning to do a thing, you have to be coachable. You have to be open. You have to be willing to listen. And again, the only guarantee there is in trading is that you're going to lose money at some point. That's it. Other than that, there is no guarantee. I don't care what your system is. I don't care what your theory is. You are not going to get 100% of the trades correct. Unless you take one trade and it happens to be correct and you never take another trade again in your life. There you go. One trade, you were correct. There, 100%. But we don't do that, right? By the way, guys, stop over trading. Stop trying to trade every little move that goes on, okay? Aeroquin says stocks are looking great on the day, especially in the higher time frames. Yeah, we're going to talk about a few of those. But right now, let's bring them up there. Fiboswanny, how you doing, man?
Good. Hopefully it's working now. Yes.
Oh man, absolutely fantastic. You guys don't understand. We were backstage there. That's why, again, like I said, it was a little bit later there, because we were trying to get Fibo's connection fixed. Because man, oh man, I would wait a minute and then I'd hear his voice, and then I'd wait another minute and then I'd see his mouth move. So
and I have no idea.
It looks like it's great, man. You're coming in great. You're looking great.
All right. Well, thank you.
There you go, man. I won't say anything about the Orioles shirt. It is what it is. I'll give you a pass on that. But
Hey,
anyway,
I've been a fan of the Orioles since I was very young. I was born in Baltimore, so I've been a fan my whole life. I've been waiting about 5, 6, 7 years, waiting, and now they're finally having a good season. I'm enjoying it.
Well, there it is. So, man, oh man. So, man, again, we had the numbers came out today, as I was explaining a little bit as you were getting your connection fixed up here. We had a mixed bag coming in. Unemployment dropped again, which was unexpected.
Mm-hmm.
We missed job creation. It was soft on that side. And basically what I was telling everybody was, the way I see it, again, we had the big misses last month with the PPE, CPI, jobs and all that. We're missing jobs again this month. So, my thought is we come up to the end of the month, we get the PPE in. And if we're soft there again, I don't see that the Fed really has a lot of juice, a lot of reason to raise rates there in September. What are you thinking, man?
I think I'm on the same page as you. I don't see that or foresee it at the moment. Like you said, I mean, there is a lot of time and things can change, but
yeah.
But given the circumstances of what we've seen over, on a month-over-month basis with this data that's coming in, it does look like they could kind of, hover for a little while is what I'm kind of thinking. So I think I'm on the same page as you. I don't have anything outside the box of what you've already said. So, you need somebody that's disagreeing with you. I'm kind of seeing the same thing.
No, it's okay. Really, agree with me. That makes me feel better.
I was listening while I was doing everything. I was listening to you talk. So everything you were talking about was kind of on the same wavelength of what I was looking at. So not too much to add on that part.
Yeah, and like I think anybody that's been watching us for a while, we both we don't really tend to worry about the news a whole lot. We both kind of believe that it's it's in the charts, and so we read the charts, and that kind of lets us know generally what to expect. So
True.
These are just opinions, as they are. But Fibbo and I both, in case you guys don't know, we tend to trade off the charts. We believe that the fundamentals are baked into it. We believe that social mood kind of makes itself known in the charts. People vote how they're feeling with their money. Either they're buying or they're not. And then we see that in the charts, and then that kind of lets us know what we think may be happening otherwise. But at the end of the day, guys, it's just reading charts. So good to see you jumping in there. Silvio, Mark, Johnny says, haven't paid much attention to the American League. I was like, Baltimore's in first place?
Yep, and second best record in the whole league. Thank you.
Anyway,
I think the Braves are the ones that are still leading. So, for you Atlanta fans out there,
well, let's go ahead and pull this up. Let's get us set up here. Whoops, God dog it.
Yeah, speaking of social mood, I do have a chart that I'll share in a little bit. That kind of takes the BTC weekly chart and kind of puts the psychology into it. I'll show you that here in a little bit.
Awesome. Well, we look forward to it. Okay. Hey, what's up, Ryan? Happy Friday, man. Marcel, what's up? He says, monkey see, monkey do. I love my victims. All right. So, big picture here, guys. This is a chart I've pulled out, numerous times over the last few months. We've pulled back right here to this previous resistance support level, which just happens to be right here at the 20 MA on the weekly time frame. And so we've just kind of come back there, tested the support. We're printing a doji at the moment. We're looking for a breakout above the 100 MA. So we came up there, we got kind of rejected. We're pulling back here. But overall, still above the weekly pivot here, still above this purple resistance support line here. You can see that we hit it back over here in December of 17 at the high there. And then again on the rejection here in August of last year, rejection again in February of this year. Blasted through on a big candle, large volume, came back, retested that area right here, right around June. Another big candle up, kind of pulling up locally here. But I mean, guys, listen, if you're looking at this, I mean, big picture here, look at what we've done here. We rallied up, pulled back to the previous resistance, rallied up, pulled back to the previous resistance, right? Rallied up, pulled back to this previous resistance, right? I mean, that's all we've done, guys. And some people are very, very bearish out there. So that's kind of what I'm looking at, big picture, right? But locally, let's pull it in locally here. I still got the same count. There's no reason to change it, guys. 1, 2, 1, 2, and then looks like we're in wave 3 or potentially even wave 3 of 3 here.
What time frame is that?
Do what?
What time frame is that you just pulled up?
This is the daily.
Oh, daily. Okay.
Yeah.
I couldn't see it on my chart on here. So.
Do what?
No, I just couldn't see. I couldn't see it. So.
Okay. Yeah. Yeah. So we're kind of sitting here right below the daily pivot. Basically, we have our range here. Everybody very, very bearish. All we did was barely dip here, created a new range. And for all intents and purposes right now, it really just looks like we did a spring here and a rally back up. Now, right now, we're still sitting, if we keep zooming in here, we're still sitting above the EQ of this range right here, right? And so we got rejected daily pivot, came back down, finding support in this area. Question is, do we keep going? If we do, basically, guys, what we're looking for is a breakout, impulsive breakout above the daily pivot right around 29,990. And then we're looking for a breakout above the EQ here, which is right, the equilibrium here, which is right around 30,420. If we can do that, we should rally to the top of the range. If we're at the top of the range, that should be all she wrote, and we should be breaking out higher because this would say this is an A, a B, and we're looking at this as a C, as a flat, expanded flat. And so, again, break out the top here. I mean, this gives us minimum expected wave 3 of 3 of 3 right there, 39,330. And eventually that takes us up here to around 54,000 if the count is correct. So, but here's the thing, guys. If we do break down, it's not a big deal. Oh my God. I mean, we can drop down here to 25,000 and we're still just finding support at this previous area resistance support. And people way too bearish over here thinking, oh my God, it has to go down and double tap down here, 15,000 or hell, 12,000 or whatever else, So that's kind of what I'm looking at. Nothing's really changed here for me. I'm just waiting to see, can we get this pop up here now and go, or are we going to break down here? And if we do, I mean, because of pivots alone, my first thought is, okay, I'm going to look right here around that 28,100 area. That's the S1 pivot here. But again, coming down further, maybe around 27,100, 200. And then maybe even if we came down further, the weekly pivot here at 26,750. I mean, those are my targets on the way down. But here's the thing, guys. I was telling you real quick here. I was telling you that, we've got this as this count here. But if we were to break down, below this wave 2 here, which is 24,750 on this chart. If we were to break down through there, the alternate count says 1, 2, 3, 4, 5 as a leading diagonal. In which case, I would be looking for it to come on down here probably to around 20,860. Somewhere right around there. So it'd just be like a 1, 2, then 3 up. So it's hard for me to look at the chart and to be, again, just looking at the levels, forget even looking at Elliott wave, just looking at the levels. It's hard to be bearish maybe until we're losing this swing low here, until we're closing down impulsively below this 19,568. Because until that, we've got a lot of price action we have to get through, guys. And if you're ignoring that, then I don't know what to tell you, right? You've got to be realistic about it. But let's pull up Fibo's chart here, and let's see what he's talking about.
Yeah, I'll start on the very low time frame and work our way up so you can see kind of how it all fits together here at what I'm looking at. Just on the hourly, I don't really trade the hourly, but I do kind of use it as a guide for my 4-hour and into the daily, of course. But one thing I'm looking at here is we went into the bull zone on the hourly at this point. I set the fibs. And even though we retraced back basically into this fib extension zone right here, it stayed in the bull zone and it's still kind of consolidating and trying to work its way to the upside. So that's actually a good sign. I mean, right now the momentum is really low. I mean, the ADX is just kind of, stagnant. So there's not a lot going on. So, more range bound trading is probably likely, but I do like to see where it retraced back to that extension here where support would come into the market and it held the bull zone. So that's the first thing that I like to see. So when you go over into the 4-hour, The 4-hour came down and actually hit the 200% target buy at 28.6 or so, to where, even though we went into the bear zone here, and we've been in the bear zone here for a while, that was that target buy while you're in the bear zone. So it kind of gives you that, that spot to, get long the market even though it's still in this bearish zone.
Yeah.
So you would be, kind of long at this 28.6 level, and trying to ride it out and see if we start to get back up, back above the shallow fib and start getting back to some higher prices. But again, ADX still really low, more range bound likely. But I think the more this holds in here, I do like the support that's starting to build on these lower time frames. And then when you flip over to the daily has maintained the bullish structure, and that's the key for me being okay buying in a bearish zone on the 4-hour, and while the hourly stayed bullish. So that 4-hour was creating some support, getting ready to kind of hopefully hold and work its way to the upside. And the daily right here is kind of showing that. I am long at 29.7, so I'm a little underwater, but not too much. And the 61.8% level finds some buying interest here, but we maintain the bull zone. And that's the main thing that I wanted to kind of hold here on the daily, because like you said, Chris, like, even if we start to break down, that's okay, because if this actually starts to break down, it tells me to get out. You take a small loss instead of taking, larger losses. So if the trend goes the other direction, we're trend followers, we're swing traders, or at least I am. I know you do other different things, but my main thing is the swing trades. And so far, I'm willing to take this risk and maintain that long position as long as we maintain that bullish structure inside the zones that I've analyzed over history. So I do like that we're holding here. This is good. Yeah. So when you go into I've showed you this before, the longer term weekly chart, kind of working this trend line to the upside here, and kind of that stair stepping that you were kind of talking about. You work up, come back down, hit support, hit support again, which was resistance, now support, kind of doing the same kind of stair stepping on here. So still in the bull zone on the weekly time frame. The shallow fibs right there at 27.3. So there should be some major support there on a long-term basis at that price, and kind of keeping this new move to the upside toward that 50K that you're talking about for that fifth wave to the upside. So all of that structure is still good, and I like what I'm seeing. Here's the chart I was kind of talking about, bringing in kind of the mood changes, and I put this kind of sine wave in here to kind of give the fluctuations of, you get into this area here on this orange trend line break to the upside, and you get into this increasing mood, optimism, happiness, hope, and starting to go that direction. The target for that break on the trend line was right at this point. Now, of course, it went up higher here, came back down and tested a support. Then we went back up, made a high, came back down and retested, worked our way up. So you got into this area here, which is that, that peak positive mood, that overconfidence before it starts.
60, that 65,000 area, right?
Yeah, exactly. And then we broke this trend line to the downside, and worked our way into some decreasing mood, pessimism, sadness. I just put a little, all the little names you could put on the decreasing mood, but we break down, and that trend line here matched the target to the downside on this correction off of this trend line. So now we start working our way back up, and I have two different trend lines on here. The blue one and the red one. The blue one is in action right now, and that's the one that's kind of should take us to that 48K, possibly 50K, somewhere right around there. And that's the one that we're on at the moment, working our way up here. But a couple of things. So basically we got into this trough of negative mood down here at the bottom.
Yeah.
When everyone was, very, very bearish, thinking it was going very, very low. But there was a lot of indication that this was a good spot to kind of buy. I bought about 16.8, I think my average was on using my program. So I'm, everything's working the way it should, and I like it. But so we're working our way up to this way, where this one's a target. But the interesting thing is the red trend line here was tagged here for the third time
Yeah.
off these two highs and working our way down. But one thing I like is this right here, this horizontal that we
Where's
kind
it at?
of that one's at 29.3.
Okay.
30 or something like, basically right where we're almost at today. What I like to see here is when this worked its way up, this was a key level back here on this trend, on this support level here. And then it broke down and then it became resistance. We didn't get three settles above it here on the weekly. It went up, came back down. But this is where we had the three settles above it. Now we're back down here testing it again. So you got to think that the daily is still holding that bullish structure with support being found right at this level. When you look at this weekly, and we're in this area of possibly increasing mood, some possible optimism that's coming on, that should be in the market on a bull market, right? So you start to get that little bit more of a hope that we could start getting to some higher prices. So if this holds here as support should, and we get into this run to the upside, I got this orange kind of triangle in here just to show that once we get up to this 48K on the break to the upside, and then we can come back down, then that 35 or so will be support. And then we work our way up even further into that overconfidence and that euphoria that could come, which I don't think will be until, post halving, to make newer highs, above 69.
Yeah.
But I don't see that happening this year, but into that next year and post halving is when we can start seeing some of those higher highs. So when you bring the psychology and the emotion into it, or just the social mood into it, everything's looking really nice on these time frames that supports right here. Now, if it breaks down, it breaks down, and then we readjust and find out where our next targets are. But right now, everything's working the way it should, and support's there. And once this breaks to the upside, then this red, the red one will come into play. So then you'll get the 50K, 35K, and then new highs into 2024. So I'm liking what I see when it comes to social mood. I like what I see when it comes to the technical targets, and everything's starting to work out pretty well. So I'll stop there and let you ridicule me. No, I'm just kidding.
Yeah, no, I mean, again, real quick here, man. We had the big sideways there prior to the 7-day rally that took out multiple months of downtrend there, and then we've been going sideways since then. So we've got like sideways on top of sideways. Would you agree that if we do get kind of what we're looking for, that breakout higher, that it'll be a quick move on up? Like if we look at the previous big green candle there.
On which time? On which one?
Oh, what we just on, the one we were just on.
Oh, the one we're just on?
Yeah, you got that previous big candle over there before May.
Previous big candle before.
Yeah, right there. Whoop, right there on the chart.
Right here?
Around May of 23. Next one over.
May of 23? Oh, this one. Candle here. Yeah. Right here?
Yeah. Or is that March?
March?
Yeah, this March. My bad. But yeah, would you agree that we'd probably have something like that popping up through there if we can, clear this top side?
Yeah. No, I think that's exactly what would happen if we hold here, and the buying interest comes in pretty strong. I think we're at an area where some people were kind of taking some profit because we had a nice move to the upside. Now we're coming back down to another level that buying interest should come back into the market, but it should be twofold. It should be the people that took profit that are on this run are going to reestablish another long position, which I have on the daily, and the daily's holding. And then also I'm waiting for that 4 hour to go back into a bull zone to add to that position because it's already been bought on the dip. But then the other side of it is the people that haven't got into the bull run yet could be getting into buying interest here. So if this holds and it starts to go up, that's where I think it would bring in a kind of a double buying interest power. So I feel like I think it would go from now where we're at almost straight to 35K pretty quickly. I don't think it'll be one candle, but I think it'll be on a nice run. I mean, these are weekly. So yeah, I could see a weekly move from 30 to 35K if that buying interest comes in twofold, like I'm thinking it will. But again, it's got to hold. And if it does hold here, that's a really, really good sign to really bring in buying interest to where a lot more people will be confident getting long here at this point. And I think that's what can really pump that market back up to that next, target area for profit.
Yeah, I agree, and I'm glad you talked about the pullback toward about 35 and holding it there. It's the same thing I've been talking about. We were just stuck in that sideways from when we were coming down there. That's just where we're finding resistance. We've been there sideways. We're building. If we break out higher, we've built a hell of a base, months long.
Yes,
so
exactly.
again, we're pulling back. We should be above that. We shouldn't be dropping down below that. Before we kind of pop up and head higher. So, yeah, man, I agree with you on that. Let's pull up a DXY here real quick. Man, oh man, look at that. What a difference a week makes, right? So everybody was very bullish here last week. And I was talking about the likelihood of getting rejected here and coming back down. I mean, that's exactly what's happening here. This is, again, the daily. Let me see here. Yeah, this is the daily. So we have big candle up, doji, big candle down. That's usually indicative of a reversal. It's a three candle pattern there that usually indicates we got a reversal. And so, I mean, I have no reason to believe we won't continue falling further here. If we look on the other side, the weekly over here, I mean, look at how awful that weekly candle looks right there. I mean, now it doesn't mean that it has to come down further. Again, we had on Bitcoin, let me see here. I talked about it right here. And when this happened, I was telling people like, listen, this is usually a really negative candle here. But if all we get is a small pullback and then we start rallying back up into it, it becomes really bullish and we get a strong move. So, I mean, we can't say that this is definitively going to be a reversal. It's just one candle. But as long as we're, continue to fall down that breakthrough there again, ultimately looking down here toward, minimally down here around that 94, 93 area to get to that, weekly S1 pivot, if I'm looking at it there. So what about you, man? You got your chart there?
Yeah, I got a couple different time frames here. I got the 4 hour. The interesting thing is it went into the bull zone here, worked its way up, hit that 200% target, worked its way back down. Now in my program, you buy the shallow fib on the rebound or the correction here to the downside. So you'd be reestablishing this position. But we just went back into the bear zone. So I haven't updated this chart. But my basically threshold theory says that this 38.2% becomes the previous shallow fib because that was the actual bull zone. So I need to see 3 consecutive settles underneath that 101.79 on a 4 hour basis. We've already had one. We're working on the second. But if we get that third, then if you're long at that shallow fib at 101.79, then you would get out, take your little bit of a loss. But if you were playing it, yeah, you would have been getting long in here, taking profit. So you'd already be ahead of the game
right
on that. But then you might be taking a little bit of a loss since we're in the bear zone. And if the next 8 hours keeps us underneath that level, you're going to get out. And then it's going to work its way to the downside. And I wouldn't look for targets on the 4 hour until you get back down to the 200% at like 98 at a minimum for a movement on this 4 hour to the downside. So I'm right on that bubble at the moment that to where I could see some, further downside. So I'll kind of have to keep an eye on that. On the daily, the interesting thing here is that it actually went into the bull zone here. But it's coming back down, so it'll be interesting to see if this actually holds or not. But if it doesn't, then I'm looking at what much lower pricing if this structure doesn't hold here. But it's a buy and a hold here. Just waiting to see if the bull zone. So but basically everything on the dollar right now for me is in this limbo land. So I really don't do much in the limbo land area. I did do something on this one here. So if I lose a little, then that's just the way it goes.
It's trading.
Yeah, it's trading. But right now it's just right on that bubble. So the next 8 hours will let me know if I'm still in it or not, basically. But I could see what you're seeing too. And that's what makes me, when I'm in this area where you're getting this kind of conflict between the 4 hour and the daily, to where it doesn't look like it should.
Yeah.
That kind of makes me have a little step back. And then when you look a little bit further on your weekly chart and you look at that weekly candle, that's not a pretty sight. So for me being long, I'm going to really keep an eye on this and get out pretty quickly if it signals that, because I got to respect that new bear zone on that early time frame that could just really kind of snowball into the other time frames and really bring us down pretty hard.
Well, it's that whole reversal area, right? And so, trends are easy, right? We buy trends, or if the trend's up, we buy it. If the trend's down, we sell it, right? But we're invariably likely going to lose a little money at those trend reversals, right? I mean, that's part of it.
I mean, isn't that what makes it good?
The idea is that you make that money along the way, and your loss is limited there, and and then you get in the other way.
I mean, isn't that what makes a good technician, is to know when the reversals are going to happen?
That's what it is. Yeah. Not being able to, keep from losing money. It happens sometimes. It is.
Oh, yeah.
Gonna lose. The only guarantee, right? The only guarantee you trade is you're going to lose money at some point, right?
Yep. Been there.
All right. Let me pull up. I've got the, actually, I want to talk about the E-minis here real quick. This is the S&P. I talk about the E-minis, of course, because that's what people are trading. Most liquid market as far as futures go in the world. And everybody is very bearish here, right? But here's what I'm looking at. So this is the EMA 50 right here. I'm not so worried about that. I can just go ahead and turn that off. What I'm looking at is the fact that we've got 1, 2, 3 down, right? And now we've got potentially a bullish engulfing candle right here up into the daily pivot. We can see that the Stochh RSI here has dipped down into oversold and is starting to curl back up. The RSI, let's see, get this over here, bouncing at neutral, rallying back up. So, I mean, man, oh man, my thing here is I'm looking at this going, man, this very well may be just an ABC here, right? And so we would need a breakout above the swing high here at 46.2175, and 0.75 there. We'd need a breakout above that to confirm it. But I'll tell you what, right now, I'm looking just with the way this is looking at the moment. I'm looking at that 1618 target, at least right here around 47.14 and a half. So for me, I think there's a lot going on. I mean, it's an early move to get in there, but I think there's a heck of a setup here. And so watching how this ends today, if we can end like this or even better, and then watching how it opens next week, if we can get that pop up above that pivot there, man, I think you can get a little early, take a little bit more risk. I think you're looking at least at 47.14 and 0.50. But definitely once, if we're breaking out above that 46.21.75, there's no reason you shouldn't be looking there at least. And here's the thing on that. Now, all of a sudden, we're above the pivot. We drop down pivot, break out back above it in the swing high. I mean, your default at that point should be, okay, maybe we'll get a pull and we'll get a pullback maybe, but then we'll rally back up higher. So that's kind of how I'm looking at this, which means a lot of these people that are they've been, it was just a couple of weeks ago. They were looking at wherever that was, this, this area here. And they're like, oh my God, it's going to break down. It's going to crash. Right. And then it went up higher the next week, last week there. And then it kind of, came on down this week, a little bit lower here now, but we're still above any major swing low, really, guys. And so I think, kind of like Bitcoin, I think if you're expecting some real big move down without actually considering, well, you've got a lot of price action to get through on the way, I think you're doing it wrong. Just my experience doing this, you can't overlook the local areas because you're thinking, oh my God, finally it's going to get where I've been talking about. I've been talking about it's going to drop this whole way up here. Finally, I might get the chance, and I'm going to just ignore, that price action we have to overcome. So that's kind of what I'm looking at the moment. Let me see. What does that weekly look like? See, we're right up there on the weekly R1 pivot. Man, that could even be. Man, let me see here. 1, 2, 1, 2, 3, 4. 1, 2, 3, 4, 5. It'll give us a 3 and a 4 and then a 5 higher. Yeah, I mean, for me, this looks like what I was talking that daily. You get this move up here toward that R1 pivot there, pull back, and then break out higher again. I think that's kind of what we're doing here. But do you happen to have a S&P chart?
What's the R1 pivot again? Was it 47 something?
The R1, let me see here. It's right there at, basically 4,700, 46.95, 46.97.
All right, cool.
Do you have a
I'll
S&P
see.
chart?
Yeah. I'll see your 4,700 and raise you to 4,880. How's that?
I like it, man. I like it. 48. Yeah, that'll get me again. That gets you your 3, 4 on the pullback, and then the larger 5. So
Yeah.
I'm with you, man. I'm with you.
Yeah, two different deals. I got the 4-hour here on the SPY. Went into the bear zone, but it hit this target of a buy right here. And then, I mean, if it went further, you'd add the target in here in the bear zone. But this is that first level of a buy and working its way to the upside. I would love to see a bull zone in the 4 hours so I can press that position. But right now it's still working its way to the upside. So now when you look at the daily is still maintaining bullish structure.
Yeah.
I would like to have seen it come all the way down and wick down to the shallow fib so I could get another long in here on the daily, because I'm out on it because I hit the target here.
Yeah.
And I was looking to get back long, but the 4 hour helps get back on that long position. So as this comes down here, and this maintains the bull zone, the next target to the upside for me is going to be, around that 4,800. So I'm a little bit higher on that. Not that it's going to go there overnight, but you're on this nice structure of moving to the upside on these moves. So I would have liked to have seen a little bit more of a dip before heading higher, but I like that we're even though the bearishness over the last 3 days to the downside here didn't really build any momentum on the ADX. It dropped the entire time. So this crossing of the negative directional index is kind of a nothing burger at the moment.
Yeah.
So right now we're looking at that buying interest should be coming back into the market. So I'm not even close to being bearish in this market right now. So anybody that's been talking bearish on this is I don't know what they're seeing. And not that it can't drop, but I'm not seeing anything in any of the indicators that I look at that structure is ready to break down just yet. So I like the next target of that 300%. And the reason I got to use the 300% here, because typically I'll go back in history to previous highs, but there are none. So I have to go with those extensions on that 300%. You could probably do something along the lines like if you wanted to do like a quick, maybe like a trend based. This isn't like rocket science or anything, but I was just kind of looking at you just take like a previous low. Look up to where this kind of broke the structure on the high here, and then come back down to this point, and then you get this extension here between 47.3 and 48.3, and then this 300% inside that zone. So
Yeah.
that target to me is that next level to kind of watch onto the upside. So that's why I was like, I'm taking your 4,700, raising it to 4,800. As that next level. So I'd be happy with 4,700 because, the leverage you get with this contract is pretty hefty. So it doesn't take much to make good profit. So if it gets up to 4,700, I probably even be like, it looks pretty good. I'll probably take some profit. but my system wise, I'm looking at that 48 as that next level, that 4,800.
Awesome, man. Awesome. Yeah. I mean, I like it. Like I said, it kind of aligns with what I'm looking at as far as, some rallies, pullbacks along the way. Marcel's asking about Litecoin. We'll take a look at that here in a minute. I think we got a couple of stock charts we wanted to look at here, Apple and Amazon. Let me see. Let me pull up Apple here real quick because we had that big pullback on Apple, right? So here's kind of what I'm looking at with Apple back here in December of 21. Getting the swing high, give us a WXY corrective pullback. I've got us as a 1-2, broke out. We hit a 3. And so far, we've got what basically amounts to an ABC on this pullback just beyond 23.6. So right here, you got A, you got B, and then you've got potentially C finish here. Further drop, we'll look at 38.2, but we do have the gap. We've got a doji, a nice large, we've got an upper and lower wick, a good size on either one there on that doji. We're finding some, the doji itself, the body right around the EQ of it. And so, the volume comparatively looking pretty good to to yesterday's, right? Coming in here a little bit smaller candle spread off the gap down.
What do you got as the S2 on
What
there?
was that?
What's the price level?
For 5?
Yeah.
If this is the low here, if we get this rally and break out above wave B here, which is 197.20, that gives me a minimum expected 207.50 on that.
Okay, I got you. Okay, I was just looking to see where I was.
Yeah. Now, if it does continue to break down here, I'm still looking at 38.2, which is 177.20, and potentially even the 50% at 170.78. So, I mean, if we keep on breaking down, those are my two targets. But if we can start rallying here, man, I'm looking for a breakout above that wave B. I'm looking about 207.5. We've got a reset on the Stoke RSI on the daily here. We've bottomed out and oversold. And then, see if we can get this pulled up here. On the RSI, we're nearing, a reset into oversold as well. So I think whether it rallies from here and gets there or we get a little bit lower. By the way, if we hit these lower targets, guys, we're looking higher up. If we hit the 38.2 and we rally off that, I would actually be looking at a target of 210, 211. And if we actually hit the 50% and then rallied up, target be closer to about a 215. So that's what I'm kind of looking at there. Just waiting to see, can we get some fall through up there now, or if we have to come down a little bit further. But Mr. Fiboswanny, what do you got saying there, buddy?
Yeah, on my 4 hour here, the went into the bear zone here recently on the 4 hour. However, like before, the previous shallow fib is this 181.13. So for that to actually go into a bearish structure, it needs to settle 3 consecutive settles under that 181. But with it coming down near that level, and we're in the bear zone, that's typically a buying interest area for me. That's where I would actually start to buy close to there and take the risk that if it does start to break down, then I get out and take a little bit of a loss. But given that it's in the bear zone, it doesn't necessarily even though when it goes into a bear zone or a bull zone, doesn't mean it's bullish or bearish all the time. Yeah. Because it could mean just a consolidative, range bound correction type market. And with this kind of correcting down here in the bear zone, it's more like sideways, consolidation before it heads higher again, as long as that support holds. And right now it looks like that previous shallow fib area should find some buying interest. While it's dipping down into the bear zone and almost getting below the bear zone and getting into that oversold condition pretty quickly on that nice correction. So I like buying the market here with my first target would be like 201 to the upside. But if this actually holds and makes a new high above that previous high of 198, we're probably looking at much, much higher pricing. But right now, if you're trading it and you're buying it at 185 here, 201 would be or 200 or so would be the target on a trade to the upside. So, but that's all I have on that at the moment. But I like that even though it went into the bear zone, it's still not below that previous shallow fib that I follow on my program of starting my fibs at the threshold levels, which I'm starting my fib there, which is like a weird ass place for people to start a fib, but that's where it starts. And so that gives me where the psychology level should be. And that's what I'm trying to measure. And that 181 is going to be where that psychology flip would happen if it starts to break down there.
Yeah. And anybody that's watching this, man, if you see some kind of where you've got that gap down and it gaps down into a doji like that, I mean, you should be paying attention. Obviously, it's not the end of the day yet. Anything can still happen, but man, you should at least be paying attention, because a lot of times, most of the time when you're seeing that kind of that gap down, especially when the trend's already down, and then you get this gap down into a doji, usually it's going to signal a bottom. Again, there's no guarantees for everything all the time, but you should be paying attention to that if you're looking for something to buy there, right? So definitely pay attention to that, guys.
Yep. And the other thing you were going to look at was Amazon, which I have a daily on, which the daily on Apple would look pretty much the same because the structure is the same. I don't have the daily for Apple up at the moment, but I do have the one for Amazon. But I mean, if you want to show your Amazon first, we can. But I was just what I'm saying is that the 4 hour, even though it's in the bearish zone and finding support, when you look at the daily structure of Amazon, it came down and held this bull zone on the daily structure. So that's another thing that gives me confidence to say going long on the 4 hour where it's at, even though it's in that bearish zone, gives me the comfort to go long there to where you have upside targets for Amazon here. So with this holding in the bull zone, the next upside fib extension comes from because we already hit these targets, so we need extensions. And I just pulled this one because it's inside the zone here, on a previous high. So it's at the upper end of this fib extension zone, where the next target would be, which is right around 158, which you would be long. Around that shallow fib area, about 130, working its way up. So even though that the 4 hours in a bearish zone, but it's more consolidative and working, or kind of a continuation, like a pause and continuation to the upside. The daily is the one that held that. So I like how they're working together on the time frames to show the bullish outlook.
Well, I like that a lot, man. That pops up there. 158 area up there is I've got the 157.70.
Which is smack dab in that zone.
Kind of target. Yeah, let me go ahead and let's just Amazon. Let me go and pull up mine here real quick. Yeah. See, I've got a fifth wave target up here around that 157.70. Now, for me, I mentioned it was a buy down here when we got this large outside bar, bullish engulfing candle.
What price was that?
Do what?
What price was that? Where were you at on that?
That swing low
95 or so?
Is 88.12 was the swing low?
88.12. Okay.
Yeah. Now this is the weekly chart here. But yeah, so again, I just kind of did this right here, and I had a wave 3 target just about right. We're at $140, $141. So we're just above that at 142 and some change. So I'm looking for this wave 3 to maybe be complete somewhere around here. Let me see here. Yeah, because again, we'd look for me. I got to zoom in now. I haven't looked at this since. let me get in here real quick.
Dig in.
Let me make these show up on all the time frames here. God, still can't get enough of them actually putting this visibility on intervals all here. It makes life so much easier. When TV did that. So yeah, if I'm looking here, of course we got that gap up after earnings there. And so, kind of doing its thing here. But we gapped up here through this pivot here on the daily time frame, up through the R1, up into the R2. So, if I'm looking at that, let me see, where's that swing low? Swing low is this right here, right? Yeah, okay. So let me see if we're looking at this right now. 1, 2 gives us a 3. We got a big gap up, a breakaway gap is what we call that. Strong bit of volume coming on that. Man, so if I'm looking at this, I would say, 1, 2, we're on a 3 here. So I could see this potentially, I'm gonna hold off for me. I'm gonna look for, get some push up here, at least to this wave B at 146.57. But here's the bigger deal, I think, when we're looking at this, is the fact that this does appear to be an ABC down here. So, again, like we've seen across stocks, like we saw with the S&P, all those things, if we're breaking out above this second wave, this wave B here at 146.57, if we're breaking out above that, then, that says this is 3 waves down. We're locked in. So we look for a new, in this case, a new all-time high, right? I mean, that's kind of where we would be looking. So I think that's the bigger story. Whether we can get some further rally here before we pull back or not, the bigger story is, man, if we're breaking that $146.57 level, that should indicate that we're heading to a new all-time high.
Yep. No, I like it.
Yeah. So let me see here. Let me see if I actually pull this. See what we got here. Yeah, so if we can make that rally up there, again, look at the idea. Maybe we got a 1, 2, we got a 3 in progress here. So we get a 5, maybe breaks out just above that. We can pull back. We would expect to pull back to this swing low to get our wave 4. So, that's this high volume node over here, 128 maybe a little bit lower, 126. That would be the expected pullback for that wave 4, which would then see us expecting to go even higher than what I have here, about 158, 160, that area, to finish out 5 up. So kind of like what I'm looking, that kind of aligns with what I was looking at with the S&P there, which is the idea we've got a 3, a 4, and then we'll break up higher, kind of keeping it all in there. So, I like what I'm seeing. I like your targets. They're kind of in line with mine.
Yeah, because that fib
overall,
extension
and so-
target would be where I take profit, and that would be that 5th wave, and then wait for the pullback and then rebuy.
Yeah, exactly. So I like it. But again, for me, the big thing is that breakout above that 146.57 level, which should indicate we're going to hit a new all-time high. And if we're going to hit a new all-time high, then guess what, guys? We aren't going to crash just yet. You're not going to see it hitting a new all-time high and us crashing before, right? So, again, you gotta learn to read the charts. I think there's a lot more in it. Fundamentals, if you're just looking at fundamentals, it's too easy to find something to agree with your emotional bias, whatever it is. You can do it with charts too, but fundamentals are a lot easier to convince yourself, right? I mean, you have to actually ignore things on a chart. You've got to ignore specific levels for it to do something what you think it's going to do, right? But in fundamentals, fundamentals are really loosey-goosey, malleable, clay things, right? You can go, well, this is what that means. And you don't really have to ignore those kind of things. So, yeah, that's kind of what I'm looking at there. Let me see here. Somebody was that Marcel was asking about Litecoin? Let me pull up a Litecoin chart here. And I don't know if you've got one, man. But
I'm sure I do somewhere. I'll find it.
We're going to look at this anyway right now. For right now, we've got actually, what I'm finding interesting is we've got this swing low, which is, this is Litecoin USD on Coinbase, all right? So we've got a low there of 81.77. And then we dipped just below that here yesterday at 81.64. So technically we have a bullish SFP right here. We have Stochh RSI on the daily resetting into oversold. We actually have now potentially, well, we got a lower low there. It's fine. Never mind. I was going to say something else, but that's fine. We haven't quite reset into oversold yet on the RSI, but you can see that in this area, there's a lot of interest. There's a lot of volume picking up. So, again, if we're going to rally from here, we should be looking minimally up here around 85.75 kind of area, fill in this fair value gap. The next one, we don't have a fair value gap on there. So we move up. But if I'm looking at this, I mean, it's hard to be really overly bearish on this. If I look at this, I go, okay, well, 1, 2, 3, 4, 5 gives us 1, 2, 3, 4, 5. And then we kind of have this, move down here, right? And so let me see here. I mean, if I'm looking at that, potentially could be like a 1, 2, 3, 4, 5. And then, I don't know. Let me kind of zoom in a little bit more here. Got some interesting bit of overlap here. Let's zoom in a bit. If they've got a 1, 2 here, this goes 1, 2, 3, 4, 5. So that gives us 3, 4. 1, 2, 3, 4, 5. Let's see. This is an ABC up. So yeah. So it'd be it could be maybe an A, B is a flat, and then what will we have here? A bit of a questionable count there. It does look like we have 5 up. The pullback so far has reached. I'm trying to do this quicker so that we can talk about other stuff as well, guys. But the pullback there, it's about a 78.6, right? Like I said, we've got this what is that? 10, 13 cent drop below the swing low gives us that bullish SFP. And this is back here from June 28th. For me, what I'm looking for, let's draw like this. See this right here? By the way, everybody's like, oh my God, you know, the halving happened and oh my God, price is breaking down and it's dropping, right? Guys, listen, it's already in a freaking downtrend. Pay attention to what I just said here, guys. The narrative is, oh my God, it's crashing right after the halving, right? It's been in a freaking downtrend for what is that? For like, you know, almost a month prior. It was already heading down, guys. The fact that it continued down after the downtrend doesn't mean, oh my God, halving happened and everybody sold. It means, oh my God, the trend is already down. See, and this is the problem most people don't get. This is where they have a lot of trouble with trading, because they listen to, you know, to crap like that. I'm telling you what, guys, it's crap. If you can't see that there was already a downtrend for a month prior, and you're getting all bent out of shape here because I'm getting all freaked out because, oh my God, the price is going down after the halving, then you shouldn't be trading. And I mean that in the most respectable way, guys. In the most, you know, I don't mean to be disrespectful there, but because when you think that, oh my God, the halving caused it to go down, you're missing the bigger picture. It was already down for a month, guys. Okay. Yes, it continued down afterward, but it was already down. It was already in a downtrend for a month. You can't trade, you know, thinking that way, you know, that way that, oh my God, freaking out that it's dropping after the halving. It was already dropping, guys. Okay. So, you know, again, I like where we're at right here. You know, you can draw you this descending channel here. I like the EQ here. The way it's working is resistance and support. So I would look for an impulsive breakout, which means basically an impulsive breakout above this S1 pivot at about $87.75. If you can get an impulsive breakout there, target should be the descending channel resistance. And if you can get an impulsive breakout there, it's going to suggest that we're heading up and out. And with what we're looking at here, right, you could minimally, I mean, just a real quick minimal target. Let me do this here. Up around 135. Without doing much of anything else, you can say minimally 135 where I'm looking, and then just watch how things happen after that. So, you know, breaking above the EQ there, you get in around $87, $88, potentially a target of that 135 area. And, you know, and then you're set. You're in a position. Maybe you continue holding if it's looking good after that, but you can just make it simple like that, guys. You know, you don't have to overcomplicate trading. All right. By the way, you know, again, we're finding support right here at the low volume node. That's what you should expect. If we do lose that, I'd be looking down here at around $76, $77 at that high volume node would be the next place I'd look to potentially to buy on that. I don't know. I didn't tell Fibo about Litecoin that we were looking at it because we just had it there. Do you happen to have a Litecoin chart, man?
Yeah, I have a 4 hour.
Do you? Okay, we'll pop that up here. Let's see. What do you got?
I didn't get a chance to trade it, but it was it's working pretty good. When it went into the bull zone right here, basically the way I set the fibs, the first positive change was right here. So you're starting your fib at this point and to the upside. So really, it was kind of almost like a false breakout or just a continuation of this, you know, of this downtrend that you're talking about that we've been in for a long time. But the extension here, the 200% at 82.18 was the buy target on the downside, which actually wicked just below it. So you would have been filled at that target on that 200%. Another thing I like about this, and I wish I would have bought it, was coming up out of the oversold conditions and back up into the bear zone as the buying interest was found at that target. So I like this. That what I'm seeing doesn't mean that it can't continue to come down, but I do like the buying interest you're getting at that area. So you would be long this market with potential of reversing back to the upside. Now, if this doesn't end up holding, I go back here to a previous threshold, which matches up pretty close to where this broke down here into this target area. So when you look at this, the extension off of making lows underneath this, which it already has right here. So we're kind of in this little area of, I'm willing to take a little bit of risk because it could be an area of reversal. But if not, then you take a little bit of a loss and then, put a little stop in there and just, move on. But the extension down here between 127 and 141 is, between 72 and 76 in change. And then this 300% on this latest move is at 73.47, which is inside this range. So for me, if this ends up breaking down and I get stopped out, I would buy back at 73.5 inside this zone here on a continued correction to the downside. But the way it's setting up at the moment, I do like it coming up out of this oversold conditions and finding buying interest at a target area that I had marked off my fib extension. So I do like it, but it's kind of that. It's a interesting spot to get in, a little bit of risk, but you're not really taking a ton of risk based on if you place a stop just underneath that target level, then you just at this point, if I would have bought it, I could have put in a break even stop and just move on. But I didn't get a buy-in. So, but if I was doing it, that's the way I would approach it.
Yeah, for sure, man. I think, again, yeah, it's just interesting level. Again, my biggest pet peeve, I guess, with the supposed traders there online is that, oh my God, after the halving, it's dropped. And, it was already in a downtrend.
Yep.
If you
all it did was drop back down to a level that held to give us a nice bull run to begin with. So,
yeah.
To me, that this is an area that should find buying interest. And on that one chart you were looking at, it's in a low volume node. So that even helped. That's another thing to add on to it also. So all of that together, is starting to add up.
For sure. Yeah. Again, it's all about that, the multiple bits of confluence there in the area. We'll see how it looks there, right? Let's jump here real quick. I've got gold and silver here real quick. I just want to generally look at. So if anybody's following me on Twitter, I made this call here. What was this? On the 22nd of June. It says gold and silver are both looking like it's probably just about time to buy. That happened to be the lowish area here on silver. Gold did dip a little bit further, but then it's rallied back up. Locally, we do have this support building here on silver. And it looks like we're doing this, some sort of wedge maybe. And you can see that we found support right here at this previous level of resistance. If I zoom in real close here, you can see that we're building this crazy looking, fantastic looking doji right here. So, man, I'm looking for a breakout. And if we can get that breakout, I think things could get interesting. And I think, if we can get this breakout here, I think we probably end up getting a breakout above the, what is this? The 25,475 area, almost $25.50. And we do that. And, again, I think we head up to a new high here locally, right? We break out and start testing these areas. We were back in March of last year and previous. So, and we've got Stoke RSI almost bottomed out and oversold on the daily for silver here. I think there's just a lot of goodness to watch here for that potential breakout. Gold, a little bit different. Again, it is the daily. It is adhering right now to this ascending support. And it is possible it's an ABC here. You got a nice long lower wick here. You definitely want to see some follow up and through. But, if we're getting the breakout above this $2,010.90 swing high on these gold futures, I think if you're getting that, I think you're probably breaking out to a new all-time high. I think that's all it takes. Again, I think we've got what appears to maybe be an ABC right here. And so, it could be 1, 2 and ready to break on out. So I think it looks like gold potentially sooner rather than later is going to see that new all-time high. What are you thinking, man? You there?
Put it on mute. Sorry about that. No, I'm actually long gold. It went into the bull zone and I actually bought. So I'm long at 19. Where am I long at? 1996. I know we're at 1977, so I'm a little underwater at the moment, which is fine because I mean we're in the bull zone. Everything's looking pretty decent. There's not a lot of like bearish momentum being built on this move to the downside. So a little underwater at the moment, but my target being long at the 1996, I have a target of 2077, which is pretty close to that previous high. So that would be my that first target level. And then if it gets up to that point and retraces back to my new shallow fib, I would probably rebuy and get into more all-time highs after that. But I did put my toe in the water on this one and bought. I do like the structure. Even though I'm a little underwater, I think it's fine at the moment because I still think it's got the ability to kind of hold at this area basically of consolidation in this little zone we're in at the moment. But that's where I'm at on gold. I just went long on that new bull zone, so see how it kind of plays out. I haven't really dug too much else into it, but that's what I'm kind of looking at. And if you get it, I mean, if we end up getting up to the target of around that 2077 or so, a dip down to 2042 would be the buy, and then I'd have to figure out what the next target above that would be. But baby steps, one at a time.
So get to the first target first.
yeah. Get to that first target, and then I can reestablish new things once that happens. So I do like the way it's kind of setting up. I mean, a little underwater at the moment, but like you said earlier, that's trading. So you just gotta kind of go with it and stick to the plan. Stick to the plan.
More often than not, that's what happens, right? We rarely get into a position where it just goes up right away and keeps going up, right? Usually it'll go up a little bit, it'll pull back, and then it'll go up, right? Or if we're going short, it'll go down, then it'll pull back, and then it'll go down further. And so hopefully a lot of the people listening in kind of understand that, right? Hopefully they understand that that's kind of that's just trading, guys. Don't a lot of you guys, you get really worried the second it pulls back against you. But if you are, that's a product of two things. One, you really don't understand how the market moves, right? And that's just the way it is, right? It's not a disrespectful comment. It's just the way it is, right? But the second thing really is that you're not using proper risk management. Because if you do risk management properly, then your position size is based on, your risk management, based on that proper amount of how much you're going to risk if you're wrong, right? You shouldn't be risking 10% or 20% or God forbid 50% if you're wrong. You know how long it takes to make back that 50%?
And don't get me wrong, where it says 10% long, it's not 10% of my portfolio by any means.
Yeah.
So it's a whole structure of my own risk management system that puts it all together. So when you put all my buckets together, I'm probably between 2 and 3% of my overall portfolio. But like this 10% is kind of a small position to be in overall. So it's not like I'm 10% of my money. It's not like I'm putting 10% in gold. Like
you're just jumping in there for it, right?
Yeah. So don't look at that 10% long as 10% of my overall portfolio. That's not what that means.
For sure. Hey, Mr. Johnson, I see you checking up there. Can you have a look at Link? Yeah, we could probably make that the last one here. I don't know if Fibo's got a chart, but I've got one.
I might. I haven't looked at Link in a while, but we'll see.
Let me see. Let's see what we got as far as Link goes here. And Marcel was saying gold is overhoaxed by Morgan and the rest. But here's the thing, guys, and I need you to understand this. It doesn't matter. There isn't even any reason to sit here and argue with somebody about whether something is manipulated or not. It doesn't matter. You can when you learn to read it properly, they can't hide their footprints. The big people that you think are manipulating, if they're manipulated, they can't hide their footprint. And so that's why I teach things the way I do, because it doesn't matter. You don't have to spend time worrying about, oh my God, somebody's manipulating the market. Somebody's manipulating the markets all everywhere, guys. It's can you trade it? And yes, you can effectively trade them all. Sure. Let me see here. Are you ready? You want me to pop mine on there, man?
No, you go ahead. I got to update mine.
Okay. All right. Let me go pop
Try
mine
to
on
update
here
real quick.
So basically, guys, this is what we've been looking at. I've been talking about this for the last year, on and off. Pretty clear accumulation range here. We had our spring. We had our test on lesser volume, which was great. We had our rally up here. Show of strength, pullback. Last point of support here. Kind of write that in. And then we rallied up again to another show of strength up here. And so, again, let me just kind of get rid of some of this other stuff we're looking at here. But this rally, when everybody was trying to short it down here, and I was like, man, no. When we printed this doji here, I said, coming down here, I said we could get a spring here. And then when we printed the doji, I was like, nah, it looks like it's a good time to buy. Right there around $5. Had you bought there, guys, all the way up here to the top, you would have been up at one point there, 63% rally on that, guy, 63.5%. So all we're doing is getting a bit of pullback here. We're at the high volume node. Overall, again, my belief is that we kind of continue to rally up here. We want to get above this green line up here, which is right there around $9.60. And if we do that, your next target, is this pivot up here that shows up on the weekly, right around $13.22. Impulsive breakout above that. You'll probably be getting up here at around $23.79. And so at that point, yeah, I think this is kind of the rally. We break out there and continue up. I think we head up here toward this 23.79 area, maybe even a bit higher, maybe even up here toward $25.50, $26. And so we make that rally up there, and then we pull back down here toward, toward 13. What is that? Almost $13 to $14 area right here. So we kind of make this overall from the low here. We make this rally up here. We kind of come down, and then we kind of just break up there. And so this gives us our, our 1, our 2, and then we just kind of hit 3 up there, and we start getting ready to, to continue its movement up, I think. It looks great right here. It really does look a lot like a accumulation in this range. So now we just need this pullback and then this rally and breakout higher. Again, we did break out of this descending resistance as well. So, I mean, yeah, things still looking good. This is the weekly. Pop over here to the daily. You can see that on the daily. Here we are here. Gosh, all this stuff's all moved out of the way now. Let's see. Yeah, I mean, so here we are, right? And so we've got 1, 2, 3, 4, 5, maybe. So it looks like an ABC right here, previous resistance. And so, yeah, I mean, I'm looking for a rally up here. Now, locally here, probably look for a breakout of this resistance. Just on this pullback on the daily. Can't even get this set up here. So, impulsive breakout above the EQ here, and then, this pivot on the daily should give you a target of the descending channel resistance, which is also top of this range. Impulsive breakout above that should send it higher up. And, that's what we're kind of looking there, right? Marcel doesn't like the idea that someone is driving price, and we all know who it is. Yeah, but again, the market doesn't care what you like, right? Doesn't care what I like, doesn't care what our feelings are. So nope. We just have to just not worry about it. Again, guys, one of the big things I'm pushing lately a lot is this idea that, how it's something I've pushed a lot in the past, which is how you view the world is how you're going to do, right? How you view the world is where your focus goes. If you're always complaining about things, not just on the charts and manipulation, but other things outside, if you're always complaining, guess what, guys? That's where your focus is. You're not going to get anywhere. You have to go there and go, okay, this is the situation. I can't change it. I can't change these externalities. All I can change is what I do, how I approach it. I'm telling you guys, you want to know the success? You want the key to being successful? That's one of them right there. Stop concentrating on the things that we can't control. And I'm not getting on to you here, Marcel. You brought up a great point for me to talk about real quick. But don't focus on things that you have no control over, guys. That's what everybody's doing. And most people aren't successful. So if just about everybody's doing that and they're not successful, then you have to do something else, which is focus on what you can control, which is you, how you view things, how you react to them, how you get beyond, right? I'll throw on Fibo's chart here, and then we got to get going. But Fibo's got his link chart here.
Yeah, I was trying to update it. I haven't looked at it in a while. The latest move is in the bear zone at the moment. When you look at the previous bull zone, which was basically just consolidation because the ADX just dropped the entire time. So it just kind of hovered here and then came back down. But when you look at the extensions, this one basically 692 to 704 range would be that first level that you might want to be buying. But the way I attack this is I wouldn't be buying until the 200% on this. And the reason for that would be 640-ish area. Yeah. And the reason for that is this: when you look at this this trend line here with this breakdown, that makes me a little nervous buying this early. Yeah. With the shallow fib on this new bear zone, resistance is going to come in at 731 here. So to me, I would rather wait for a new bull zone on this as the RSI comes back up into the bull zone, or I would wait for 640 on the downside. So for me, this is a non-trade. So I'd really just be kind of waiting for those two things, either more of a downside to that 200% or a new bull zone. So, but right now I'm slanted a little bit on the bear side on the 4 hour. I know you're looking at different time frames, but this is what I would normally look at for trading on the 4 hour. And right now I would be in limbo, not really doing anything, waiting for one or the other to happen.
Oh, for sure. No, and actually, let me show you real quick. You said that 640 area. If we were looking at, that's actually the EQ of the range here.
Okay.
Right around that 634, right above the S1 pivot here on this daily time frame. So I mean, just pivots alone. If we're not overcoming, by the way, you said 730. You were looking at as your rejection there.
Yep.
And that's that pivot there on the daily. So yeah, I mean, we can get rejected there, and if we do, I would be looking just with fibs, I would be looking to buy down here in that same area you're talking about, which is actually the 61.8 retracement. So it's the golden pocket of that rally up there. So again, guys, there's different ways to look at the charts. And they'll usually get you around the same area. It's just stop jumping from system to system to system and style. Pick one that resonates with you and then keep working on it. Stop trading 57 different things. Pick one to start off with. Pick one stock, one crypto, one time frame, one style of trading, and just do that until you get good at it. Stop chasing 5,000 different charts or 20,000 different charts if you're in crypto, right? Just pick one, guys. Just pick one. Work with it. Pick one time frame. Pick one style of trading. Focus. If you can do that, you'll get good at it. And then you can look and start opening it up. But y'all want to come in here and try everything on every time frame, on every asset available. And so you're all over the place. You're not focused. And again, I said earlier, focus is, wherever your attention goes, that's what you're going to be doing, right? And so if you don't have that, it's hard to get better as a trader. Nobody out there is telling you guys this stuff. Nobody else is telling you guys this stuff because most don't understand this. Okay, I'm going to tell you guys, I'm going to tell you real quick before we go here. Most of the people you're following online, they have no clue what they're doing, all right? Generally, you might have been actually in the market losing money longer than they've been losing money, right? A lot of these influencers on crypto Twitter, X Twitter, whatever, Twitter X, crypto X, whatever it is now, they just started in crypto and doing it there, and they're good at marketing. They get your attention, right? But they don't understand these things that I'm trying to explain to you here. These things that make the difference. The things that I wish I had known, me, when I first started. So I didn't lose money for the first, 4 years. of doing it.
Yeah, you and me both.
So I'm telling you guys right now, bring it all in. Bring your time frames in. Just pick one time frame. Go with that. Make sure you're doing one way of trading. Other than that, make sure that you're just focusing on one. If you absolutely are keeping yourself from focusing just on one, just keep it at a couple then. You don't have to look at 57,000 charts. Look at one. Get used to it. See how it moves. I'm telling you, people make a living trading just one thing. People trade just oil. People trade just natural gas. People trade just the S&P. And they make a living that you guys are sitting here dreaming about. Millions of dollars a year. It doesn't happen overnight, but you get there. And you only have to focus on one stinking thing. Imagine, guys, if all you focused on was the S&P for the first 3 hours of the trading day. You could do that, and you can make a lot of money doing it. Doesn't happen overnight, though. But it requires the focus to get good with the system. It requires the time frame, so you're not just bouncing around and getting confused everywhere. And it takes just one product, guys, just one thing. And then once you get good at that, then start branching out. If I can give you one big advice other than risk management and looking for the higher confidence trades, that would be the other bit of advice I'd give you. If you can do that, you have so much opportunity to be so much further ahead than everybody else. But you have to be willing to do the things you have to do to get better. And most people aren't willing to do that. All right.
Yep, that's exactly why I joined up with you, because I think we're both at a stage in our life where we're at pay it forward.
Yeah.
Get the the experience and the wisdom that we've had over the years, wishing that we had that when we first started, knowing that there's a lot of people out there that need that information, that might want that information.
Yeah.
And that's why we're here to give that information. Because like you said, the first 4 or 5 years, I wish I had like a strong mentor, like helping me along the way.
Yeah.
In other words, I just got my ass kicked from one end of the room to the other. And then you kind of learn the hard way. But I mean, everybody's kind of got to get that ass kicking every once in a while. But it's nice to have different perspectives, and you can learn from it, find what's right for you, work on what works for you, because not everything works for everybody. Just like anything in life, there's different choices and different ways of doing things. So
yeah, exactly.
So that's why I joined up. Exactly what you're saying is like, I wish I had this when I was the first 45 years of doing charts.
Oh yeah, it would have made life so much easier.
Yeah.
But if you guys are looking for a coach or a mentor in anything, that's what you're paying for, guys.
Yeah, okay? It doesn't even have to be trading. It could be anything.
Yeah, with anything, with absolutely anything. You're trading for that experience. They've been through the ups and downs. They've learned the hard way. They've spent usually tens of thousands, if not hundreds of thousands of dollars on self-development and skills development in that particular thing. I mean, when you look at a coach or a mentor, that's the way you look at it. You look at it as a shortcut, so you don't have to spend all those years and all that money in trying to figure it out. You're going to make mistakes. You're still going to make mistakes. I'm going to tell you guys, you still are human beings. We're emotional.
And we still do. we're not perfect either. We get our butt kicked every once in a while too.
But that's what you're looking for. If you guys ever wondered what it is, that makes people go get coaches or mentors in whatever it is their chosen field is, that's what it is. It's this idea that you can pay a little bit of money up front compared to how much you're going to pay in the long run if you don't, right? And you shorten the time for you to learn effectively. But the other part to that, guys, I'm going to tell you, I say this all day, every day. You absolutely have to be coachable. You have to be open. You have to be humble. You have to be willing to listen and to put into practice exactly what they're telling you, because they can explain it to you all day long. But if you're not willing to do that, you're not going to get anything out of it. So yeah, there we are. Anyway, okay, guys, well, we're going to get out of here. We've done this for a bit. We're kind of over, but hopefully you guys enjoyed. Hopefully you learned a lot. I think Fiboswanny and myself, you can see here, we're both just kind of playing those charts and expecting markets generally to head up for a while longer anyway. But if they don't, we've got things we're looking for on the pullback. And, if you're trading, that should be the way it is. Don't get so dogmatic on it's going up or down. Just say, listen, I think this is what it's doing, and I have to get this, through this level to validate it and make it more likely it is. But if it goes through this other level, the other way, and invalidates it, well, here's what I'm looking to the downside. And as long as you can do that, you guys are going to be all right. It's when you get really emotional and dogmatic on what has to happen especially when prices just going sideways. That's when you end up getting hurt. So, any last thing you want to say there, Fibbo?
No, thanks for having me again, and enjoyed it. Sorry for the little bit of delay at the beginning. I don't know what was going on, so I guess the reboot helped because
it turned out all right, man.
Yeah, exactly. And,
So,
and of course, go Orioles.
You want to join us again in 2 weeks, man? You got time?
Yeah, no, yeah, I should. I should be around. Yeah, I'm around that Friday. Yep.
All right, guys. So you heard it. It looks like we're gonna get Fibbo back here in 2 Fridays from now.
Yep.
I'll be back next Friday, same time, 11 a.m. Central Standard Time. And man, oh man, there you go, guys. I hope you guys have an amazing weekend.
And hopefully we'll be at 35K.
Yeah, that'll be nice, right?
Don't quote me on that. I was saying I hope that we're at 35K in 2 weeks. But we'll see. We'll see what happens. We'll take baby steps and see what the market gives us. So
that's right. All right,
man,
guys. Follow us. Follow Fiboswanny there on Twitter. Follow me. Hit the like button. Leave comments, whether you agree or not. And we'll see you guys next time. Okay.
All right.
All right, y'all take care. Let me see if I can get us out of here gracefully.